Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Twitter, GoPro, X, and CHK on the daily weekly time frame. So the Twitter bulls are still trying to build this base of support down at 1675. 3 days in a row with lower highs at that level. Resistance is 1704, 1705, and 1716 for the bulls to try and shift momentum, because right now momentum favors the bears. We had a very bearish Monday and Tuesday. Right now the bulls are just trying to build this base of support, break those resistance levels, and try and change this momentum where we have clear lower highs and lower lows. So from where we stand, I would say anything under 1772 is going to be another lower high. So we're not out of the woods if we do break bullish from 1705 resistance and start to try and turn things around. But this is really the level that the bulls need to show up, because if we do pull back any further and break 1644, there's a significant lack of support down to 1567, and that would pretty much give this weekly chart back to the bears. The bulls can still hold on here on this weekly chart if we can establish this higher low and try and get back over the 100-week resistance, which rejected the last 3 weeks. That's going to be in the upper $17 range, but as of right now, it's just the bulls trying to follow through after building this base of support at 1675. GoPro on the daily, bears still in control here as well, just in the short term. Should say bulls are in control overall, but Thursday, Friday was bearish with a close at the low of the day on Friday. Anything above 1054 is a higher low on this daily time frame. The middle Bollinger Band support is going to be above that level, so that will be tested first, and looking like that level will be tested Monday with how we closed and how close we are in proximity to that moving average, which is ascending. So bulls looking for that higher low compared to 1054. We did get that higher high, which continues the uptrend on the daily chart. And the weekly chart very clearly is rejecting from the 100-week resistance multiple weeks in a row. So that's a key important moving average to be watching, because once we get over that level, there's a lack of resistance here due to the dump back in October 2016. There's a lack of resistance in the $12, $13 range. So the bulls would love to clear this moving average and then be in the clear in terms of heading towards that level. X on the daily has had a very significant bounce, and it's been a 5-day bounce at this point. We did reject from the middle Bollinger Band at 2587 from the high of Friday, and we have rejected from this middle Bollinger Band the last bounce attempt. Anything under 2647 is a lower high. If we start to see some bearish signals and lose this higher low pattern and see a bearish reversal candlestick, we will look to form a higher low and give us a potential entry opportunity on that consolidation, looking for that higher low, because we are anticipating, due to the weekly time frame being in control of the bulls for the last few months, and the fact that we bounced off the 200-week moving average support, we are looking for the bulls to stay in favor on this weekly chart, trying to make our way back into the $26 range. So in order to break the lower highs, we need a higher low and then a higher high for follow-through, depending on what happens Monday. If Monday we close with another green day above the middle Bollinger Band resistance, then there will be a possibility that we do break that level of 2647 on this attempt without needing to consolidate. So that's why Monday will be important, and the shape of the candlestick that follows it. CHK on the daily, healthy consolidation. Inside bar, we're seeing the commodities begin to consolidate. Natural gas is showing a little weakness. Oil is starting to consolidate after a very big bull run. Inside bar, a bear break at 428 and a bull break at 438. Watching to see which direction breaks to see if the bulls are going to head back up to 449 resistance or head down to try and form a clear higher low, because we haven't really formed a clear higher low since 395. The bulls have been strong enough that they haven't consolidated, and that's what we're doing right now to try and establish this level. Keeping in mind the weekly chart is a bearish reversal, almost a gravestone doji, a little bit of a shooting star, but it's a lower high, and we knew we weren't going to change the trend here coming off the low. The middle Bollinger Band resistance has been resistance for a significant amount of time, and we're going to have to set a higher low and then a higher high for the bulls to change the trend on the weekly time frame. So that's where we stand as we head into next week, watching for higher lows on CHK and GoPro, and looking to see if Twitter can break bullish. Twitter right now is the most bearish name on this list with where we stand on the daily chart, just because we don't have any convincing bullish follow through at this point. Hope you have a good rest of your Sunday. We'll see you tomorrow.